Today's topic is taking money out of your S corporation. Is it a draw? Is it your compensation? And how does all of this work? Hi, my name is Tony Cameron. I'm with TLDR Accounting, and we're going to discuss taking money out of your S corporation. So, step one, whenever we're discussing taking money out, is reasonable compensation. Has your reasonable compensation been set for the year? Is this payroll? Do you already have that set up? So with our clients, we use Gusto and we come up with reasonable compensation for the year, and it's paid out monthly in most cases. It depends on what the client really wants. But we have a salary survey done. We know what reasonable compensation is for them, and they get direct deposit once a month with their paycheck, and that's all taken care of. So they have the withholding set on that. That's good to go. So step one for us is reasonable compensation taken care of. Yes, done, move on. The next question becomes, what is this payment for? Now, if it's for your estimated taxes, as we've covered previously in the S Corporation video series, if it's to pay for your S Corporation estimated tax payment for one of the quarters, then yes, this is a draw. You can just make the payment. You're good to go. Now, we've covered those two, which is reasonable comp and estimated taxes. What else could this potentially be from, right? Now, do you have employees? Is it basically the return on having those employees in your business? That would then be a draw. Now, if instead it's because you decided to work for an additional 15 hours and you brought on a new client, and this is the compensation from working those 15 hours, we probably should run it as a bonus and not a draw, because that is actually tied back to what you're doing on a day-to-day basis as an employee in the business and not a business owner. All right, so we've covered, is it reasonable compensation? It's not. Is it for your estimated taxes? It's not. Is it earnings since you have various employees in your business? If it's that, it's a draw. If it's because you decided to work a little bit more and you put more hours into the business working on client work, then that should be a bonus and not a draw. Now, generally, is it a return on your capital that you've invested in the business? So that could also be a draw. Now, the big thing you need to be careful about with draws, there's two of them. One is if you have a loan out with a bank, you need to read the fine details, because a lot of times they mention how much money you can take out of the business and you don't want to violate those covenants and have your loan come due. The second instance is, what is your basis in the S corporation? Now, basis is a complicated tax topic, and I'm only going to be going over high level. So basis is normally calculated from the beginning. So the first day you made the S election till current. Now, it's normally how much you've put in the business, how much you've earned in the business, and how much you've taken out of the business. And it's a little bit more complicated than that, but generally, in the simplest terms, that is what your basis is. And you keep track of it year over year, because each year you have more money that's earned in the business, your net income, and you probably take money out for your estimated taxes, which are distributions. And so your basis does vary year to year. It's required to be reported on your tax return as of the new tax law. And so you need to know it, you need to be keeping track of it. And if your draw causes your basis to go to zero or below zero, you're then going to owe additional taxes on it, because it's no longer a return of what you've invested, it's gains on your business. And so you got to be careful with draws and how is it going to affect your business. And it's just one of the things that you need to be careful with. And is one of the reasons why S corporations are a more complicated entity type. All right, so we've talked about, is this a draw or is this salary? Now, it falls under the salary if it's part of your reasonable compensation, or it's from, say, working overtime. That's all reasonable compensation. You should run it as a bonus. Now, if it's for your estimated tax payment or income earned from an employee, so a return of your investment in the company, then it would fall under the draw category. Now, one of the things you need to be careful with, and why we harp on reasonable compensation and documentation for it, is the IRS is very particular about what is a draw and what should be compensation, because compensation is hit with payroll taxes and they want their payroll taxes. So documentation of your reasonable compensation should be step one no matter what, and then you can follow the rest of it to see if it is a draw or should be paid out as a bonus. I know this is a complicated tax topic and we just covered the bare minimum over top of it, but hopefully it was helpful and it provided you with a little bit more information about draws versus salary. If you would like to subscribe to our newsletter, the link is in the comments. You can also subscribe to our YouTube channel and get the rest of our video updates.